Good evening, legends and legendettes. In this quick session, I'm going to talk about the Bitcoin halving and just how crucial this next year is. It's a bit of a different video. And so, without further ado, let's just look at certain things. And a lot of you, of course, are aware of the Bitcoin halving, but just to explain how it works before we go into the charts. Very often, you get a decreasing in the amount of the reward by a half for the miners, for the actual amount they mine Bitcoin. In 2012, you got, for example, 25 Bitcoin for mining Bitcoin for the miners, and then 2016 is 12.5. So as you can see, the numbers going by half each time. So now from the 2020 halving, the reward was 6.25 Bitcoin per miner for every block they mine, pretty much. And so next Bitcoin halving, the reward is expected to be even less now, naturally, because again, there's a supply shock, and so 3.125. But something interesting for the next Bitcoin halving, we know it's going to get half. The reward is going to get half. It's going from 6.25 to this amount here. But what we notice is this very interesting thing as well, which perhaps is overlooked. It's mentioning here how, according to how the current of Bitcoin being mined is quite small compared to the total amount of Bitcoin being traded. And it is unlikely that a relatively small drop in supply can cause a significant price increase. Thus, a possible further increase in the price of Bitcoin will be much more influenced by growth in demand than a reduction in supply. And so this is something to also really consider as well. Some people think, for example, the halvings are becoming less and less relevant. But one of the things in Bitcoin history is that whether it's the FTX crash or whether it's Lehman Brothers or whatever, it's every cycle there's some kind of black swan event or the coronavirus or Mt. Gox. But the funny thing is, often price action does the exact same thing. History never repeats exactly, but it does rhyme. So that is just something to consider as well. And whether the halvings are still relevant or not, it's just up to you to decide. Roughly, the next halving is going to be April 1st, 2024. Generally speaking, statistically, up to the halving, leading up to the halvings, there's usually a huge run-up like this. Not always, but generally speaking, there is. There's that transition naturally from this accumulation to the more bull market phase. And you have to also bear in mind, markets don't just go straight from a bear market to a bull market. It takes a while for actually fear and greed to build up, and especially greed. It takes a while for greed to build up. Sometimes closer to the halving, you at least get a move towards the midpoint between the last cycle peak and the local low of this cycle. Sometimes perhaps we might get a move towards at least at 40-50k. That's something to consider as well. And so what can we do differently this next cycle? And this is something that I'm looking more and more at, and it's something to really always be aware of to get a more holistic view. And it's looking at total crypto market cap. This is a neat way called the Fibonacci expansion, and this is a neat way of trying to figure out potential take profits at certain zones that price can go to once we break out of a all-time high and looking for certain price points external to the range. Okay, and I've drawn it from this point here and here, and so naturally the key ones I have is the 1272 extension, so around 3.62 trillion, and the 1.618 extension, so 4.14 trillion. Of course, you could definitely go to potentially maybe 7 trillion, 8 trillion. All these are still in the cards, but you have to also appreciate that once you get to this point here, around 3 or 4 trillion, the risk reward of the investments get more and more risky. And at this point, I'm going to be more interested in more cashing out as much as possible, and then going more towards trading and leaving some to run. Because, for example, a lot of the opportunity you have to appreciate is at this point here, from all the way to here. There's a huge run up in terms of total crypto market cap. That's like a 200%, just over that. And the risk naturally increases the more and more you hold on. Because very often when you look at the cycle, this initial run-up was actually a lot of the opportunity. And of course, there's a second opportunity, but you definitely want to be scaling out at this point as well. So what's some simple tips and tricks really you can really use this? So what I've done is essentially, I've drawn a box essentially between this 1272 extension of this local high here, so from 1 here and 0 here, and to this 1618 extension, so 4.4 trillion. And I've drawn a box here. And as written here, this for me will be a massive take profit zone in the next cycle. And the beauty is that when you plan stuff like this in advance, it means that in the heat of the moment, you rely less on emotion and you rely more on strategy and pretty much just robotic. And so when you have this mapped out, it really makes things easier. And so, of course, we can go much higher, but you have to appreciate that it will be a key, and this is also a key Fibonacci expansion. These 1272 and 1618 is respected a lot. Then, of course, you can scale it on a grid as well. And of course, you can leave some to run. But me personally, I'm going to be mostly trading after this point and maybe leaving 20-25% in spot investments to run. Then I've drawn this box here. This is essentially looking at potential areas if we have a black swan event, similar to like COVID or some unexpected last capitulation event. Potentially, I would expect a move between 735 billion to 450 billion. And this area is quite interesting. The midpoint will be around 600 billion. But if you draw Fibonacci, actually, of course, a lot of discrepancies where people would draw it from. But if I draw Fibonacci essentially here, so from here, that's the COVID low to this all-time high. So yeah, right now, this 786 is around, of this whole move, is around 730 billion. That's just something to consider. Right now, it seems we're at a fair value where buyers and sellers are pretty much matching. But that is just something to consider as well. Perhaps we might get that black swan event. We'll have to still wait and see. And so the aim of the game is really, how can I buy as far away possible from all-time high, and then that really increases my multiple. I don't think it's really fair to say that you should just buy the dip all the time, because the problem is your average is still going to be quite high. If you could try and slightly use some tools, and this is where technical analysis does help, even for investing, try and buy as far away possible from all-time high as possible, and to get a 10x, okay? Because that can actually change your life. Something else, guys, I think you should consider is, sometimes it's okay not to trade, particularly when the conditions are so choppy. One of the hardest aspects of trading particularly is keep preserving your capital from the bull market, preserving it during the bear market, and keeping as much as possible for the next bull market. Because any idiot can do well in a bull market, and that preservation is one of the hardest aspects. And so, just food for thought. I'm not trying to put you down, but what I'm saying is that it can be very, very difficult to navigate these markets on a day-to-day basis, and it can get very, very exhausting. And so sometimes you might consider that you might place your efforts in other areas and try and get as much investing capital as possible so that you really can capitalize on this next bull run. Okay? Because a major risk is that you keep trading and get chopped out, and then by the start of the next bull run, you just run out of your capital. So you want to kind of position yourself as well as best as possible for the next halving as well. So that is just food for thought as well. And for example, let's look at Polkadot. It's a typical coin that a lot of us like. The all-time high was around $55 roughly. And so if you're DC'd at 35, 30, 24, all the way down here, like your average isn't going to be the best in the world, but if you had drawn Fibonacci, used other technical analysis, if you're scaling in between this zone here, then of course your results are definitely going to vary. Because if you think about it, if you actually if you measure up from here to the all-time high, that is like roughly still well over 10x. So, and the similar process, you always have to consider that the first run-up of the bull, even this cycle, this was a lot of opportunity here. But a potential strategy you could be doing is just scaling out in a grid. So this is one of my strategies that I teach briefly. So the way I'm doing it is this. So I'm going to briefly go over a potential strategy you might use for spot accumulating altcoins and actively investing. So selling off some at occasional moments and then buying back using some of the profits and accumulating more units. So first of all, the key is to find a run-up of at least 80%. Then wait for a decline. And what you can do is, rather than trying to DCA at all these different points, so minus 10%, minus 20%, minus 30%, try and DCA, and this is a potential strategy you might use, incrementally 25% more each time. So maybe 6%, so you need to allocate a certain amount you want to invest. Maybe 6% initially, 8%, 9%, 10%, and you go all the way down. Okay, you incrementally buy more, and then that lowers your average. And then you write down your average, and each time the coin doubles in value from your average, you can sell off 20%. And if you keep doing that, you find the next run-up of 80% again, and then you wait for another decline. You can use some of the profits to accumulate more and more units, and that way you accumulate more and more units over the long run. And this is more active investing. So that's just an approach. There's different ways to skin the cat, of course. Of course, do join the MDX Algo group to really learn more about these in detail. And I believe there is a referral link, actually, if you look below. Essentially, that's the aim of the game. The aim of the game here is essentially, how can I buy as far away possible from all-time high as possible, and that way you get that at least 10, 20, 30x. When it gets to here, of course a lot of people will be looking at 200, but if you're buying in these zones here in the next 12 months, if you play your cards carefully, you're able to just pretty much capitalize on this aspect of the move. So that's at least a 10x. And then you can just chill the rest of it. It's that expression. The bear markets is where you do all the hard work, and the bull markets are just for chilling. Well, that's just some golden nuggets for you guys. Thanks a lot for watching, and do check out my YouTube channel, which I set up quite recently. This is where I post my passion for crypto and trading, and just tips really to fast track your investing and trading career. Thanks a lot guys for watching, and I'll catch you in a bit.